Smart investors intentionally seek out boring businesses and assets because they provide predictable cash flow, long-term stability, and compounding growth without the emotional roller coaster of chasing trends. Here is why the wealthy prioritize the boring over the glamorous. They generate reliable, recession-proof profits. The companies that pay the most reliable dividends are rarely the ones making headlines for explosive growth. Instead, they're the boring companies that make everyday necessities like toothpaste, laundry detergent, and morning coffee. Because consumers need these products regardless of whether the economy is booming or struggling, these companies remain consistently profitable year after year. Smart investors look for established blue-chip companies like Procter & Gamble or Johnson & Johnson because they possess an economic moat. This means they have the brand dominance, scale, and pricing power to survive market crashes, recessions, and technological shifts, often emerging even stronger. They fuel the dividend snowball. Because these mature, established businesses aren't desperately pouring every dollar back into high-risk growth and expansion, they have the surplus cash to consistently share profits with their investors. Many of these boring companies have raised their dividend payouts every single year for decades, surviving wars, oil shocks, and global pandemics. Investors love these stocks because the regular quarterly checks can be automatically reinvested to buy more shares, creating a compounding dividend snowball that turns small amounts of money into substantial wealth over time. Boring real estate offers quiet scalability. This principle also extends to physical real estate. While many people are drawn to luxury or glamorous properties, seasoned investors know that some of the highest yielding assets are actually the least exciting ones. Assets like self-storage facilities, mobile home parks, laundromats, and farmland do not make headlines, but they offer highly predictable cash flow, minimal maintenance, and quiet scalability. For example, a laundromat isn't affected by recessions because people always need clean clothes, and a storage unit doesn't call the landlord with plumbing issues. They remove emotion and prevent self-sabotage. The financial industry profits when people panic, constantly check their portfolios, and trade emotionally. However, building real wealth requires doing something so boring and so effective that it feels like cheating. By investing in unexciting index funds or broad sectors like utilities and consumer staples, investors are forced to look at the long-term horizon. Ultimately, wealthy people do not try to outsmart the market or chase the next hot trend. They execute a boring, consistent strategy for decades, allowing compound interest to silently do the heavy lifting while everyone else stays broke trying to be interesting.